Hi everyone. I gotta make sure my volume is off here. So I just want to double check that you're actually seeing me. There we go. All right, and let's move that image out, and then we'll see me. And here we are. I've got oil up here for us to look at. I want to, wow, I look very grainy. Um, so first of all, I do want to say this. If you've been looking at Twitter and whatever your social media stream is of choice, people have a tendency to wind up dramatically when things happen. And so, two things I want to say to you. I'm not going to be talking about whether I agree or disagree with what happens, but here's the thing. If you agree, great. You're not going to increase your ability to use mental capital by arguing with people who don't agree. That's number one. If you disagree, then the number one thing for you to do is get on the phone to your senators and congressmen and complain to them. Because here's the thing. People that wind you up on Twitter and X and Instagram and Substack and wherever, they're going to wind you up and you're going to deplete mental capital. And guess what? You're not going to trade well. So I've been through 5 or 6 of these events, big ones that feel earth-shattering. And at the end of the day, people who make a ton of money in the market are focused on price and not the madness that people are chattering about or the arguing about whether we should be involved or not involved. It doesn't matter. You can't change it. And if you want to change it, the only avenues are inside of our democratic republic is that you get on the phone to your senator and your governors and your congressmen. That's the only choice you have. Otherwise, you're just going to be winding yourself up. So, that being said, we're going to start with oil. It's very unlikely, in my mind, that they close the Strait of Hormuz. Couple of reasons. And again, I don't have a bunch of letters behind my name. Just lived through a few of these events with Iran. And at this juncture, way more than half of the oil that goes through the Strait of Hormuz goes to China. Maybe 20-30% of it goes to India. Because remember, Iran's been sanctioned. So if they cut off their business partners, where are they going to get money from? Because they're going to need money to fight. Strait of Hormuz is not going to close. That being said, if it does, the spike that it creates in crude is going to be a tradable one that will exhaust into prior areas of support. So we don't have the 6 o'clock time frame yet, right? It doesn't open. Everyone knows I look at the market exactly the same way every single day. It's a very boring process. It does nothing but tell me where prices are sitting because that's all I care about. I want my head to be calm. I want it to be still. I want my prefrontal cortex not to be flooded with endorphins and cortisol that make me not able to think. And so I sit and do the same thing every single day. Might be boring for you if you're looking for excitement, but excitement looks a lot better when you're adding zeros to your balance on your trading account rather than rushing in like a lemming and getting caught because of what you think is going to happen, right? We just have no idea. So let's frame it up and take a look at this. Here we've got, let's choose 1, 2, 3, 4, 5, 6 days of trading. Okay? The largest candlestick of volume. I'm not talking about the largest distance of the candlestick. I'm talking about the magnitude of the candlestick, right? Not the range, but the magnitude. And the magnitude is directly related to the volume. Okay? So when I point out a chart, I'm going to point to this volume event, and I'm going to go, well, listen, we have got one of the most unbelievable thunderstorms going right now. I'm praying that we don't lose internet, but it is what it is if it happens. So here we are, big candlestick. Notice it occurred on the 18th of June. I don't know, what was that, Wednesday? I can't remember. Thursday, yeah, right, happened on Wednesday, and we broke out of the candle and moved back into the candle, and right now we're sitting in a space that still is inside of the candle as for the close of the day. Now, what could happen is we could gap up. This is last week's expected move. The daily expected move right now is $1.82 from the close of Friday. But because of what happened, I'm waiting to draw these lines. The wedding was absolutely fantastic. I mean, it was lovely, superb. Everybody had a grand time. Truly, I mean, absolutely fantastic. Thank you for asking. So oil will open 5% up. I will take the other side of that bet. I will. So yeah, that's what I'm thinking. Let's give it a couple of minutes. Let's see who's front running to see who's going to come out on the upside. And then let's try to position. Now here's the backdrop. A lot of technical traders and the things that are run on algorithms, they are still net short oil. And they're net short oil because they believe we're moving into recession. Okay? Now, this little thing we got going on across the pond is really giving us geopolitical uncertainty. And it's going to flex. But remember, the trader is looking for an advantageous, outsized move that will ultimately either carry them to target or create an area where they want to go short. Sorry, talk with my hands a lot, and they look like big Shrek hands when I've got them near the camera. My apologies. I'm going to try and maybe sit on them a little bit and not be like that. So here's what I did with this very big candlestick here. I put an anchored VWAP on it. Now remember, a VWAP measures the traders, the majority of traders inside of the move. And if they're above the VWAP, they're making money. If they're below the VWAP and they're long, they're losing money. The VWAP is flat right here. And so essentially, they're positive. The longer term VWAP, excuse me, I got the hiccups. Longer term VWAP is still sitting almost right in the same place. Friday's opening range candlestick formation, we moved out above it and down below. Now, here's something I want to tell you. When a chart opens up and you see this flat, you see the opening hour move up and then move down and move up and then move down and then move up. Obviously, it's going to take you about 5 or 6 candlesticks to realize that the chart, I don't want this middle thing. Hang on a sec. I just want, maybe I just want a price range. Let's just do a price range. Oh, I see. It still gives me that halfway thing. Never mind. All right. This is going to give us the price range. That's half the time it's been in there. But when a moving average goes sideways, it tells you that they're in balance, and what they're doing is accumulating inventory. They're going to accumulate it on the bottom, accumulate it into the top, and then when it liquidates, either distributing for a profit or liquidating at a discount, we're going to know where it's going to go. But obviously, to me, the baseline event comes in to the expected move from Friday's area, right down here, broke right through it, and then came right back up. Absolutely beautiful price formations. These traders are paying attention to what is going on in the option chains. So if you want to write this down, what we really want to see, let's see, we got 5 minutes to go. I'll tell you exactly what the numbers are, so get your pen and pad out, and I'll give you the distance that they are expecting oil to move from the opening tick as soon as it recalibrates. All right, and it could be the widest one. So let's take a look at the ES. All right, last few days, I'm looking for the biggest volume event. It's right here. That would be the 18th of June at 3 o'clock. It's not a very big candle. I find that to be most interesting, right? Look at that. The size of that 3 o'clock candlestick is not too bad, right? Now you guys get to see me making funny faces as I stare down my chart. So we went to the top of that range and then fell below it. So what it's telling me is, look at this daily expectation from Wednesday, actually it was Monday to Friday. It stayed right inside of that move. So really this chart is also sideways, right? Look at the big fat range this is sitting in. That's something very important to look at. When it's sitting in a range and we have news, allow the reflexive wick to exhaust, and then you've got a reversal. That's usually what goes on. Don't fret about limit up, limit down. We can't do anything about that, folks. All we can look at is where prices give us our best opportunities to make money. That's all we can look at. So let's focus on that. Let's focus on that. We've got 2 minutes. We have this candlestick here also, and that occurred at 3. I expected a lot more fireworks for Friday. I really did, because I mean a ton of options expired. A ton of them expired, and we didn't really have any massive volatility, but we did have this buying candle from 3 to 4 o'clock, which I think is really pretty interesting. So what we're going to measure is, relative to these big candlesticks, is price moving up above them, down below them, and how far are they expanding outside of the expected move? If we get some kind of massive gap down or massive gap up or whatever, we'll just start zooming out and looking for the levels that matter. Okay, let's take a look at the NQ. All right. Ooh, this one's interesting. June 20th, 10 a.m. So traders easily battling with everybody that sold. This is a bearish candlestick. So everybody sold here and really barely up over the top. Now, my thought, statistically speaking, is we should have a fade, right? I believe this market is in a fade structure all the way across. We've got 20-year data that says that we should fade this week. The last week of June is usually a down week, so I would not expect us to have upside pressure. And so we'll have to zoom out to see where the buyers are. But if we stared, oh, there it is. All right, let's have a peek. Right? Let's zoom out. Let's go 4-hour chart and let's go to CL. Look at that, right at the top of the weekly move. So here's the thing. The calculus that's being used here is very mathematical, folks. It is very mathematical. These traders have nothing to rely on except the math that tells them what direction to go in. They are not reacting emotionally. They are not. And notice, opening tick right into last week's expected move. All right, so this number recalibrated. Holy smokes. Man, I would like to be selling some options here because this is way too much. All right, so the daily expected move is $3.65 from the open. And that open is 78, so $3.65 is 81.65. You know, I have to tell you, oil is probably the most fun thing to trade when everybody else is losing their minds. Because people just don't think clearly when things like this happen. They get very nervous. You know, there's some people that just are great under crisis, and some people aren't. You know, the mom with 5 kids that are used to falling down and getting bloody, you're like, yeah, it's all right. We'll figure it out. We'll work through it. And somebody who doesn't have anything super dramatic happen, they just lose their minds. And so people are literally losing their mind. I started doom scrolling this morning before I got to the airport, and I literally turned everything off. I'm like, forget about it. I'm not going to get anything but a headache listening to this. So here we go. There's oil. Opened up. Oh my goodness, it's coming down. Yes, look at where they're going to come in. The buyers are going to try and put a floor in right here. Now, the question is, do you want to take it up there, or are you looking for some other kind of trade? So let's think this through. Let's actually mechanize a trade here under the element of what's likely, who's doing what, and what levels are we seeing respond. Okay, so first thing, let's go to a 5-minute. Big 5-minute candlestick. Have we gone 5 minutes yet? Nope, we got about a minute and a half. Big 5-minute candlestick. Again, last week's expected move. Today's expected volatility move all the way up here. For the end of the week, that's interesting. $6. So 78 and 6 is 84. Is that right? Yeah. 78 and 6 is 84. But we do know that this number it crashed into was a number that was really important because they backed right off of it. And so I'm going to just put it there. The style, I want to make it a white line, and make it thin, and we're going to make it dashed, right? And that's going to tell us, hey, listen, we know that's last week's expected move. Downside pressure. Now, of course, we don't expect oil to trade lower overall, but we certainly can see why it is that it's bouncing there. See the old highs? Listen, if you want to know where a chart is always going, look to the left. It's going to give you the best idea of what you're staring down. Okay, so as it sits, it's building out a range. You know that the traders are very likely to look at bullish action because the daily expected move is really high. The weekly expected move is very high. But at the end of the day, you know, I mean, they're asking us to expect moves that we really haven't seen in a while that held. They just expand and then collapse. So we'll see what's going on. Again, 78, $3.65. Oh my gosh, the vol just exploded into the weekly event. That's very interesting. Let's see what these guys are up to. First level to test is usually the best one. So this one, $3.66, so that's 74.34. 74.34. And I'll get these lines up a little bit for us after the fact. But here's what's happening. We're moving up. Look. Momentum, solid upside. Notice, when it gets into this region, it has a tendency to run as long as the slope of the VWAP stays upside, right? Let's go back to the 5-minute. Here's our next 5-minute candlestick formation, right? Now it's under the VWAP. Everybody that came in here that said, hey, I want to go long, they're sitting down here. That is a big candle. That's a very big candlestick on a 5-minute chart. We would anchor a VWAP here as opposed to this one from down here. Oopsie. Let's do that. Oh, where did I anchor that other VWAP? Let's go to the hourly. All right. So if you feel like trading this, you can. If you go, hey, this is going up, wait for 76.15 to test or get as close to 76.15 to test and give yourself a stop that's maybe 30 cents wide, and you can trade it to the upside. If it loses that area, it's going to try and fill the gap, right? So here is our anchored VWAP from this area. Yeah, there's nothing happening right now. Volume is not very big. It looked big on the 5-minute, but to me, that's what we've got staring down. So let's move to, let's go through all the others and see what's happening, right? Look at the reversal. These are Friday's expected moves. Gap down, automatically starts buying. Here's an interesting note. I've been trading in environments like this a really long time, okay, where headlines come up and people lose their mind and they're running for the blankets and the teddy bears in the corner. Doesn't work like that. Big traders will come in, they'll front run and push they'll stack orders up into the open. People will see it, level 2, whatever, which I think is absolute garbage, but to each his own. They'll pile in, make traders chase down, and then they'll turn around and rip their heads right off. And that's exactly what is happening this morning, this afternoon, this evening. All right. So look at us, bottom of the box. Let's see what the vol looks like. Okay, so, oh my gosh, somebody just got creamed. That is it. A lot of people got in trouble right there trying to short that. Okay, so right now, the open was 59.64, and they are calling for a $56 move, right? So here's the open. That's 59.64, $56 move would be, I don't know, on 60.20. I think that's about right. Yeah. Oh, isn't that interesting? All right. Okay. Okay, the range for the highest volume candlestick in recent time is, oh, that's a 4-hour. Pardon me, don't want to do that on. Yeah, that's the 3 o'clock candlestick right here. Let's change that. Very interesting, right? A little bit shallow, but big volume candle. Notice the traders are going to try and come into the base of that candle. That might make a nice short, right? That's my thought anyway. My thought is they're going to try and run into that. Notice, see where momentum is? Slow. Range of the candlesticks are getting bigger, so more volatility in there. But the bounce, if I were looking for a short this morning, and I literally just got it this afternoon. I don't even know what day it is right now. If I were looking for a short right now, I would be looking at around this 6,008 area. But notice also, this is the low of the Globex opening candlestick from Friday, and the halfway point up is that same 6,008. So that's where I would position, because why? Inventory, accumulation, 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 distribution, back into accumulation, liquidation or distribution at a discount. It's going to run right back up into that area, right? That's my suspicion. So the move 60.21 on that area, and then where are we here? What is that? 64.50. That's 59.08. 59. Let's do it. All right, now let me stop and answer some questions. Okay, heating oil is up the most. Let's see. Oh no, somebody had snow to shovel. Yeah, well, a lot of you guys are saying short oil is insane, and you could see the move in oil was an absolute short off the open. Absolute short off the open. Look at that. See, don't expect what you think social media is telling you you should think. It clearly is not the same thing, folks. I promise you. I promise you. As she takes glasses off one ear. It is not going to be what you think. And shorting oil is a fantastic trade right now. Fantastic trade. I would not be going long oil. I told you that in the very beginning. But if you want to go long oil, this would be the place it would bounce, right here near 76.15. Because if it doesn't, it's going to fall right into the gap. Right into that gap. Okay, it's hard to trade what you see when what you see is being colored by what you read or what you hear. Unchecked middle line. Thank you, Donald. I got to figure that out. I'm a pretty big putz. I don't think tonight's open reaction will be as bad on the NAS. Okay, everybody chit-chatting about the open. Yes, level-headed. You've got to be level-headed. And the reason silver is dumping is because it absolutely exploded higher, and it's got to mean revert before it takes the next run to the upside. Yeah, oil is up, certainly. But from the opening tick, it's done nothing but fade. All right, so let's go do our analysis, walk through everything that we're seeing, and see, what do we want to do now? Yeah, let's just walk through it. Okay, first, we've got our ES done. Let's go to the NQ. All right. NQ, I can't find my calculator, and that is really annoying me because I hate addition and subtraction. It is very boring. 227 points they're calling for, which is nothing really in the NQ. 227 points from the open at 648. That's 875. All right. Highest volume candlestick, we've got it. The range is there. Let's see if the middle line gets to go. Text, no. Coordinates, no. Yeah, this is different. This is a price bar. This is not a GAN box. So it's a little bit different, but that's okay. What we want to see is what's the range of the candlestick with the highest volume. Okay, and you can do crazy things like draw Fibonacci's on them, on the upside and then the downside, and it'll give you, look at this, right at the 2x. It's amazing what these high volume boxes will do. But the reason that they work, folks, is because big traders are just leaning on the math. That's all they're doing. Here's Friday's low Globex. It came right into 21,745, and now price action's rejecting it. So what we would need to do is look for some kind of bounce that allows it to sell off, or a candlestick that begins to fade right off of that weekly expected move from before. So let me look at that downside pressure event. That would be 422. Okay, 21,422. Oops, don't have enough move here. All right, somewhere around there. Okay, so that's what we're staring down. Again, frame out the entire thing. Say, okay, I know traders are fearful. I know that there's a tendency for, under these fearful environments, the guys who are gaming the weak hands will pack the orders waiting to the downside and then draw the shorts in and flip them around and then squeeze them into resistance. That does not mean this is not a continuation to the downside. It easily could be. Statistically speaking, it very well could be a bounce into resistance that rolls further to the south. That is my expectation, right? I mean, if we take a look at 4-hour charts right now, we can see that we've moved. This is a little bit of a topping formation, and we've got ourselves a little rounded top. It could mean that we fade and then bounce and then fade again. Or it could mean that we have a nice clean fade and we turn around and rocket to the north. Here's how we're going to rocket to the north. People are going to be overly bearish. They're going to start mapping out more doomsday scenarios. People are going to pile in short and they're going to get shredded because the price action is going to be held up by the volatility, what the volatility chains are saying as support, because they are using the options to do that. All right. Okay. Next one. Let's go to let's go to Bitcoin. All right. Now we know Bitcoin is, well, we don't know that. Bitcoin, in my mind, is a liquidity measure. If we take a look at how Bitcoin looks right now and we compare it to the NAS, take a look. They look very similar, especially in the last couple of weeks. Absolutely similar to me. So my thought is that micro Bitcoin is a measure of liquidity, and I have been bearish on this. For those of us that listen to my morning setups on YouTube, I do put them in the Topstep page, but I've been saying to you, hey, listen, this is bearish. These are bearish formations. And so notice how long ago it was that we had this bearish candlestick on the 21st of May. That's the biggest volume by far. It's almost twice as big as the next highest candlestick. And we've broken down from there fairly dramatically. And notice, look at the color of the candlesticks that have had outsized volume. Bearish. If I have got more selling candles that give me high volume, I've got selling going on, and they're selling the spikes here. This one's gonna, I think it's gonna come in some more. So how are we staring this down? Let's take a look at what the volatility chains are telling us. Well, I'm glad you're making money, because that's why we're here. I think you took a little bit too much risk, but that's just me. It could have completely gone the other direction. Okay, wow, look at that. No options set up for tomorrow. None of them. What? They're not giving us the IV. They're only giving us the weekly IV for these guys. So let's do the weekly IV. It is 4,700 from the open, which is 100,000. So that's 95,300. 95,300. And then upside. Oh, it just populated. That's good. All right. 41. So that's 96. 100. Yeah. 95.7. Okay. So that's, nope, that's going to be, I'm going to move this down. This 7. Okay. And this one is, that's a doji. So We got some interesting things going on here. 104.1. 104.1. Interesting. Look at that. Okay. All right. Let's take a look at it. Let's see what we want to do with Bitcoin. In my mind, what do we have here, right? We've got a candlestick formation that is clearly telling us buyers and sellers are having a big fat fight. We have no idea who's going to win. My thought is, let's take a look at the largest candlestick for volume in recent time. You know, you could look at this and go, oh, you know, I could use X, Y, or Z. I think I've got way too many of these guys here. I just want a couple of them. All right, so what's the thought? My thought is this thing's going to punch into resistance. The most likely place for it to go is up into resistance and then fade again. Why? Large volume candlestick that came in on Friday at 1 o'clock, right? Right there at 102,000. I think the bounces are sell zones. Obviously, you want to manage your risk around that area, but notice, look at where momentum is sitting. I mean, it's awful. It's awful. And as long as it's here, it's telling us anytime price action slips down into this area, you're going to have selling on the bounces. That's what I'm seeing. Selling on the bounces for Bitcoin. Oh, look at this. That's nice. Okay, hang on. I know, I am such a nerd. But look at where it came into. Look to the left. Here's the fly in the ointment. I'm thinking it's going to be short. If, however, it gets up over 100,795, it's going to force people who were short to turn around and buy to cover. And so it could get some acceleration all the way up into the 102 area. That being said, legitimately, because momentum looks like this, you could easily collapse to a 5-minute and say to yourself, okay, I have a box of motion. I am printing candlesticks above, take a look, they're above the VWAP, right? You got to manage risk here. The opening candlestick formation, you're above the high. You're not printing higher highs anymore. So what you want to see it do is break the close of that 5-minute candlestick, and that's going to give you more short action. Now, you might say, well, I want to get a better one. Okay. See the bearish candlestick formation. You could try and get a short right up here at 100,685. But listen, 300 ticks. That's it. 300 ticks, get out, because if not, it could run all the way up for a couple thousand. My thought is I would not short this here. Why? I'm above the opening VWAP and I'm above the candlestick high of the open. And so there's a fight here that's not confirmed by that opening candlestick formation. It's a bullish confirmation, right? So it could easily extend through the gap here, but I don't want to take it long because I'm short biased. And so I will wait until it comes into the edge of this box and confirm its way out of it, right? That's definitely what I am going to do. All right, let's go to gold. Also, listen, when we see price action fade off of our commodities like this, under this war drum action, what it's telling you is the market, the big players in the market, don't have any desire to front run this information. Now, here's the thing. They could drag everybody in, so everybody piles in short for a bit, and they could turn around and shred everyone, or they could move up very gently and then open the trap door underneath. What we want to do in areas like this is trade level to level and get out. It's not a, hey, let's buy this and just see where it goes, or let's sell this and see where it goes. You take a trade into resistance, or you take a trade into support, just like, take a look at this. All right, I'm going to delete a bunch of these because these are all measurements of the price action before. Let's take a look at the movement here. Again, bearish candlesticks over the last few days. That's huge, right? The biggest candlesticks, and I mean by volume, not range. Put your framework around there and see what's happening. They are landlocked. They don't want to buy above 34.12 at this juncture. They might push it out and then do a rug pull. Here's the gap fill. Now it's probably going to go sideways for the rest of the morning. Where do I have this one anchored? Do I have this one properly anchored? Yes. So I am going to delete that anchor. And I'm going to put an anchor on this one. So we can see where that box is. Could pullbacks be buy zones? Absolutely. This is the expected move. 33.80 from Friday. Right? No, that was Thursday. Pardon me. Because I was out of the office on Friday. So that's the expected move from Thursday. Let's see what... A good evening to you also. Let's see what gold is telling us in terms of 30 bucks. Yeah, $30 from the open. And so the open is 3,400. Wow, a lot of round numbers today. So 34.30. Look at that, right near heavy congestion here. And then 33.70. Yeah, right there. Very nice price action formation right there. Just going to be landlocked in general. Look at the trend though. Right? Listen, central banks are continuing to buy gold. There's no doubt about it. They're giving it a little breather right now. And here's what's super interesting. As gold fades, what's going to start tracking when gold has had a gigantic run and everybody's talking about it, the storyboard goes that silver catches a bid and tries to move in the same direction. So notice what it did. Savage move to the upside and then a fade, but look at where it fades into. The highest volume box of the candlestick that occurred on the 12th of June. Folks, that can't be a coincidence. They are looking at these regions, right? They are looking at them. And so now we're right in the midline. So what does this tell me? Hands off. Absolutely hands off. If I have a double bottom, I can try and buy the bounce as long as my momentum stays high, or I try to walk up this wall of worry but it's going to give me all kinds of problems in my mind, right? It just will. So these, I don't like this trade unless it's way down here or if it's way up here and it's breaking down. That's what I would say about silver. There's nothing really that tells me, oh, this is a great trade. Now, let's play devil's advocate. All right, Anne-Marie, you're such a wimp. Surely you could figure out a trade to go in here. Listen, we know what happens in trading cycles. We have areas where inventory builds. Here it is again. Here's inventory building. It's in a box with a clear low and a clear high. Builds, inventory. Okay, I'll buy it there, but I'm going to sell it up there. Buy it there. I'm not going to buy any more up here. I'm going to buy it here. I'm going to sell it here. I'm not going to sell any more down here. I'm going to sell it here. I'm not going to, and then it liquidates. It could easily have been in distribution, in upside distribution for a profit, but it liquidated in the direction of trend, which is what I would expect, because when a chart breaks a trend by time, meaning I can turn all of this into one candlestick instead of price, it tends to fall into the original trend. So here we are. Here's another trend. Here's another box. What do you want to wait for? You wait for the break. And when it breaks, you can say to yourself, okay, if I take this break, I probably want to do a micro because I don't want 18 cents of risk, particularly in my silver, because depending on the size of my account, I could start getting nervous really fast, right? But if it breaks out long into this area, if it breaks down, notice it's got wicks here and it's still turning around. Wicks still turning around. So there's a problem here. From this one, it never went above the VWAP. Never went above the VWAP and then absolutely fell off the cliff. Or if it did go up the VWAP, it didn't have a bullish candle and it began to fade. So this area looks more like a long to me based on the VWAP, but literally I can only trade it from the bottom of the box to the top. So that, to me, garbage, but you can set up a trade easily using a 15-minute time frame and just draw a box around your areas, look at the big trend, and wait for it to drop back into the trend and take the short. Okay. All right, let's take a look at natural gas. Okay. Natural gas has been doing a lot. So let's take a look at a big picture. All right. Now, here's the thing that's going to get sticky. Europe is the last thing that they want, folks, is expensive energy. If they have to deal with expensive energy, they are going to have a terrible time. As long as energy prices stay low for Europe, they're going to be fine. If natural gas keeps lifting, they're going to fall into a whole heap of trouble. Just saying. Okay, so the weekly chart for natural gas shows us in this very ridiculously awful compacted area of garbage, right? Tough. And I said this, was I on Lunchbox Trading on Thursday? I think I was. I can't remember though. Maybe it was Wednesday I was on. Whichever day. I said, hey, listen. Oh, I know what. I was at the buzzer on Wednesday. That's what it was. I said, hey, nat gas absolutely had a monster move. It's going to roll over. Simply because that's what this chart does. It goes from expansion to contraction, right? And right now, these are the vol moves on bigger picture formations. Here's the rub. It's been holding this low for many weeks. That old resistance that became support that broke to higher highs. And so it's a do or die here, but price action suggests, along with all the noisy bits that we might be having, is that pullbacks going to give this chart some buy zones. Okay, so let's take a look at the size of the biggest candlesticks. Way back over here when it was on its big run, it was on bullish candlesticks. Now it's kind of even. So what does that tell me? We're going to continue to trade from the bottom of the box to the top of the box. So if I were staring this down to say, hey, where am I going to position? I would want to see a failed retest of this region near 379, 380. Remember, these price in 10,000ths of a tick. And so there's a lot of money to be made here. A lot of money to lose also. But we've got all of this noise. Our momentum is up above the halfway spot. So it's any man's game right here, literally. So if we move down to the hourly chart, we can see again, like all the energies, like all the commodities, we opened and have faded. That's a good sign for things that could happen positively in the market. Okay, so from that space, we can see this is a really bullish candlestick. Let's see how we're behaving relative to that candle. Oh, what do you know? Right in the middle of it. Okay, so there's a big battle to hold this floor. If it loses this area, again, I would prefer that we would lose 377. But if you really felt like taking a short, you could. I just wouldn't, because I'm right back inside of this little box of noise. All right, so that essentially tells me what's going on there. Oh yeah, and you know, it's for the one of the most volatile things in the UK is energy prices. And it's because it's insane. Yeah. So, yeah, we've had some really rough weather. But again, you know, you see these cycles over and over and over again. And since I live on the Gulf, I'm always looking at the news. The only real disruptions that last are ones that come from Cat 5s that end up, you know, doing something to structural resources. Everything else is they know well ahead of time. They shut down well ahead of time. The worst time we ever had was with Katrina, Hurricane Katrina, because it was catastrophic damage, right? Cat 5, I'll pull out my tinfoil hat from the bottom and say seeding technologies have made hurricanes much worse. Not global warming. But anyways, let's go ahead with something else. Nat gas fading, I think it goes to the bottom of the box. Right? Now, it could drag a lot of people there with it that are thinking all of this is going to rise. But at this juncture, I think it's back to normal. Here's how we know we're wrong, or here's how we know I'm wrong. It breaks the high, and any retest gives you a higher high. So if I said, let's say I was looking at this and we saw this, and I said, oh, this is going to fade to here. It's going to fill the gap and move down. how do you know Anne-Marie's wrong? First of all, it doesn't stay below the low of that candlestick except for a minute and then turns around and moves up. And then it moves up and closes above the box. Remember, everything is in terms of accumulation and distribution. And watch them. Accumulate, 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 accumulate. Distribution. Watch these boxes. They're going to tell you whether your supposition about direction is right or wrong. So, I would not be saying that simply because I can see low, higher low, high, higher high. And the VWAP is north, and the zigzag pattern is north, if I'm staring this down. Right here, I don't see that. I don't see that at all. I'm under the VWAP. I'm in a range for sure, right? I'm trying to hold on to the last VWAP formation, but nothing but noise. Nothing but noise. So my suspicion would be a bounce into resistance that fades. And what is that resistance? It's the top of the high volume box. If I'm wrong, guess what it's going to do? It's going to go over it. So if you go, hey, I'm going to trade what it is that I think she's saying, look to the left and go, what is the congestion doing? She said the top of the box might work. That's 397, but I'm seeing congestion all the way to 3998. So I'm going to put something up there to sell. And so my stop is only going to be about, I don't know, 10, 20 ticks. That's how you run that. But everything in terms of this box, I can't even tell you how useful it is. And here's what it does for you. It calms your brain down dramatically. Because you're not thinking, oh, I wonder what's going to happen here. I wonder, you just say to yourself, okay, what have they been doing in the boxes? If your box is not clean, you know, the ugly formation is there and the traders are sitting in a wider pattern. But you literally can trade any box on any time frame. And what the box does is tell you, okay, here's what my relative range is. And that will tell you what your risk is. As long as you have that in your head and you're not rushing the trade, rushing into or rushing out of, or just being emotional about getting in, you're going to do just fine, right? So what do we have going on? Copper, gap down, and nice big bounce. Let's see where the biggest volume here is for copper. Wow, it's way back here. Okay. All right. Well, color me surprised. Well, not even. I'm not remotely surprised. Not remotely. Okay, so we've got 2 action events. And hey, listen, you can anchor these things anywhere you want. You can look at hourly charts and anchor them only 3 days behind. Those things are squishy. What you really want to be solid on is, where's my box? What are the traders likely doing? And how can I participate? And so if we're staring down something like this, and you look at this and go, all right, well, I have this pretty good size. Whoops, let's do this. Oh, for goodness sakes. So here is a big volume box, right? It's this one right here. So I'm going to move this up over here. Widen it up. That's the largest volume box in several days. All right, is that right? Did I get that one right? Yes. Okay, so look what it did. Dropped down below it, tested prior day's action, and now it's back up in the box. So guess what? All the traders that went long here are saying to themselves, okay, really glad it got to the bottom of the box. I'm going to hang on to my long here. But if it gets up to the top, I'm going to trim some gains again. Why? You're bounded by a big volume candlestick. That's the anchored VWAP from there. And you've got an anchored VWAP off of one of this next volume area, which is a little bit higher, but not that big of a deal, so it could easily fill the gap. My thought is, have a look at the box, folks. I clearly see there's nothing but sellers here. So if I put a sell order at 186.65 and it breaks past 187.60, I'm out. If HG is too big, choose a micro, right? But it's clearly telling you nobody is buying up there. Down here, it's a little bit messy. People are buying and selling all over the place, but up here, it's very clear. So that's where I'm going to position my trade. All right? That's my thought. All right. AMP already put margins back to normal on CL. Yeah, and here's the thing. The CME will tell you first that that is what's going on. So you go there first, and you're going to see if the margins are going to move. Do you want to go back to the NQ? All right. Hoop, thanks so much for being here. All right, here's the storyboard, folks. Remember, we drew a Fibonacci off of the largest volume stick candle from Friday. We put a box around it, and then we drew the Fibonacci. It came down to the tick on the twos, and now it's trying to bounce. But here's where it's been stalled for the last, 20 minutes. The low of the opening candle of Friday. So what does that tell you? I'll tell you what it tells me. It tells me that people want a short, but they don't have enough pressure to force it down. And equally, they don't have enough pressure to force it up. So we've got to wait for resolution here. Here's my thought. Under the anchored VWAP, under the volume candlestick from Friday, momentum is low. It tells me bounces are going to be sell zones. If I were setting up my trade, I would be looking somewhere around 21,850 to 21,875 to initiate a short. I don't think these traders are gung-ho about going long. I mean, we do have geopolitical risk, but this is not a crater zone environment. It simply isn't. I know what those look like, but they don't look like this, right? That's the benefit of experience in the market. When your number one goal is paying attention to price action, not reading narratives, not listening to social media, not going down rabbit holes of X, Y, or Z and why not, da 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 da. I mean, essentially, that's just like a bunch of old ladies gossiping together. That's literally what it is. Listen, old men gossip together too. I've seen plenty of that. We just blame the ladies for that primarily. So that's my fault. Everybody sits around and does that sort of thing to their own detriment. Don't do it if you want to clear head trading. Do not do it. So Here's the thing. If you want to take this trade now, I would not advise it. Why? The risk is too wide. Yeah, but what if it rolls over and I miss it? Well, what tells you that it's going to roll over? What if I take it long and it continues to run up? Yeah, but trend is down and momentum is in negative territory. So learn to define your edge so that when you get into a trade, the number one thing you have managed is risk. And if you have risk managed and then you go, you know what? I am not afraid that if this trade doesn't work, I'm not afraid of that. I think a lot of us put on trades and we get very afraid that the trade doesn't work. And if that happens to you, it's because you're not prepared. You are not prepared if you have that fear event, right? Very, very important. Manage the risk and say, you know what? That's why Dakota can put a trade on and go to bed. That's why Dee can put a trade on and, go do X, Y, or Z. They're not afraid of the loss. And so this is a supremely important skill to develop. And it's got nothing to do with chart analysis. It's the 5 inches between your ears that it's going to manage. All right. Oh my gosh, I'm going to burst into tears, nondescript. That is the nicest thing. I really admire Lance. I mean, I really admire Lance. And so for you to say that, that is fantastic. I really appreciate it. I really, really appreciate it. Let's take a look at Dow. We're almost, whoa, it's almost time for us to go. I'm so sad. I'm not gonna lie. I am counting the minutes down until I can shower and get travel grime off of me. Oof. I just, ugh. Sorry. That was too much information. I realize that. You have to forgive me. Sometimes I can be a little vocally expulsive. All right. Whoa, look at this picture. I mean, what are we seeing right here? They are selling off. They're selling off. What's super interesting, I just read a piece of data that was after Liberation Day, and they had all these media things that said, oh, foreigners are dumping the US, da-da-da-da-da, and that did not happen at all. All that data stuff came out, and it said everything stayed relatively similar. What they did do was rotate sectors, which is very interesting. We'll talk about that a little bit more some other time. But here's what we're staring down. Downside pressure, but notice it holds the low of Thursday and begins to bounce into the gap. So let's look for big volume. Okay, so, all right, let's take a look at this. Let's do an anchored VWAP here. Okay, so this is pretty ugly, to be honest. Let's see if one is inside the other. So super interesting. Here is a negative volume candle. It's a doji, really, but it's got the highest volume. It came on, what is that, Tuesday? No, Friday, Thursday, Wednesday. It came on Wednesday. On Friday, we had 2 candlesticks, almost the same amount of volume, but it tried to break out of that area, rejected, fell through it, and now it's going to sit here. What's my guess? This is a short. where's the risk, right? Volume, lower bullish, right? We are underneath that negative 50% for the Williams percent R. We've got that ADR is really rising. And so that gives me a little bit of, I'd rather wait to the top of the box and short it there, or see a failed test. So something like this that bounces into it, fails, retests, and then starts failing again. And then that way I can really manage my risk the most tightly that I can. I think that would be it. Does anybody have any charts that they want me to stare down before we go? Thank you so much, Kevin. I appreciate that. Yeah, Lance is the real deal. He is the real deal. Absolutely. I don't always agree with the way that he looks at things, but when he looks at things, I go, isn't that interesting? Because it gives me insight to how another person might mechanize their trades. And so I absolutely love that. Thank you. Yes, that's not how you say his name, spell his name, but yes, that is him. That is him. All right, let's, hey coaches, I was 500 away from payout and managed to go on tilt and lose my account. I'm usually well risked, but it's almost like I wasn't the one trading anymore. Any advice when close to a payout? Okay. So when we get close to a payout, something happens that forces us away from process and pushes us into a space of expectation for profit. And so what expectation for profit does is cloud our minds to process. And so the only way, and listen, through my trading career, I have had many years of big runs up and then just giving it all back, and big runs up and giving it all back. And my balances began to flatten out and trend when I focused purely on process, held my risk parameters, so I never looked at my balance, never looked at my balance. I only calculated what's my risk, how many times can I risk that, and if you fall into the risk threshold, bye-bye, you're gone. And so in order to get yourself out of the boom and bust, because a lot of us pass combines, get to XFAs, excuse me, I'm tired, get to those, start making money, and then all of a sudden your brain goes bananas on you. Literally. It literally goes bananas on you, and you start thinking, oh, I got to do this, I got to do that. And you forget what got you to the space. Now, here's the second thing. A lot of us get lucky passing our combines and getting to the XFAs because we don't manage risk properly. And when we get to the XFA, what happens is those squishy bits that don't create real power in performance, they get exposed. Because remember, that's the goal of trading. The goal of trading is to expose every weakness you have, psychological, physical, metaphysical, all of them. Trading will expose every weakness you have, and the market will exploit it day after day. So the thing to remember is understand what you look like when you go on tilt. Put the markers in front of you that go, whoa, you're getting close to getting on tilt. And here's how you never get on tilt. You take a trade. If it doesn't work out, you look at your risk and you go, what's my threshold for the day? What's my risk threshold for the day? It's da-da-da. Listen, if you don't have one, I'm going to tell you right now, your pockets are not deep enough for you not to have one. Your pockets have to be 9 zeros deep before you can say to yourself, I don't need to put a risk threshold on what I do day to day. I'm just being honest. You're going to blow up account after account after account after account. Set your risk threshold. If one of your trades doesn't go through, it is what it is. There are billions of interactions. Nobody can predict anything at all. And so there's always going to be epsilon that shreds your trade. It happens. Okay? Second trade, same thing happens. Maybe you're not seeing the market well. But based on my risk, I can only have one more trade. And my risk is defined, so I better stop out. And if you stop out and you can't sit back and go, okay, time to learn some lessons. Market charged me some money. I need to see what's going on. If you don't do that and you get back in, that's on you. That's on you. That is a lack of self-control. I know, I'm just blistering tonight. I'm so sorry. I'm not saying that to be mean. I'm saying that to say, listen, the market is exposing your weakness. Find the weakness, fix the weakness, or the market will keep exploiting that weakness. That's all there is to it. Simple math. Somebody is looking around. Listen, anybody play chess? I am a terrible chess player. My husband, 2 of my sons, excellent chess players. I refuse to play with them because, I don't like losing. I'm like, why am I going to play with you if I know I'm going to lose? But see, I get into the market and I can win. So if I know, hey, listen, every time these traders sound the alarm on what's going to happen about XYZ, the first candlestick is always a fake out. The first 30 seconds of motion in the Globex Open is a complete lie. They're faking you out. Choose the opposite direction when there's a lot of drum beats and all of that, right? I know that from years and years and years of studying price action. But if I didn't know it and I did it in the opposite direction and I chased the trade and it stopped me out, I've got to go, wait a second, what happened right here? Okay, a bunch of people went down and then they turned around and went up. Okay, why? Where was prior support? What are they trying to do now? Just because they moved it in the opposite direction, does it mean that all of a sudden, it's going to stay in that opposite direction and oil's going to fall to the floor and the markets are going to rise really high? I don't think so, because there's geopolitical risk. But you can't think about all those things if you're right in the middle of a trade and then it stops you out and you're like, oh, I got to make this money. Pump the brakes. Slow down. Slow down so you can understand what is happening. And that is going to give you power. It's going to give you so much power. You will rush to your desk in delight instead of trepidation. You'll rush to your desk in delight. It doesn't mean that you won't lose, but manage it. And if you have 3 trades that go bad in a row and you hit your whole risk threshold for the day, step back and go, well, I'm not trading anymore because obviously I don't see what's happening here. And if you're a speed trader, God help you, really. I mean, that you unless you've got something completely automated, that is a losing game, folks. I'm just saying, it's a losing game. All right. Yes, I do sideways stuff. Shrink wise. I'm the local helper. I'm not slowing down for anyone. You do you. You do you. And you're very welcome, everybody. Everybody's got opinions. Hey, listen, thank you so much. I love spending time with you. I love talking about the markets. Tomorrow, I'm going to have these. Once I see how the volatility moves around a little bit, it's spiking pretty well in certain areas and compressing in others. But tomorrow morning on the morning video, it'll be up. So, just go to the Coach Anne Marie room. It'll be sitting there for top steppers. And you'll be able to see what the markets did overnight and where to go. At the end of the day, I think oil's going to come into support and bounce. I think the indices are very likely to bounce into resistance and fade. And, I suspect that volume sort of dries up a little because, there's so much uncertainty, so very much uncertainty. But stay calm and carry on. Watch your risk and learn the lessons that the market is teaching you. Just learn them, or you're going to pay tuition over and over and over again. Who wants to do that? Right? Take care, everybody. I'll see you tomorrow. I think I'm on Top Quiz. I love these easy questions that come from Eddie. I've told him to make them harder because I feel guilty, but it's a nice way to get yourself into the VIP. All right, everybody. Take care. I'll see you tomorrow. Bye-bye.